But we start off with an earnings alert on Peloton. Shares are plunging 25% after the fitness platform reported its latest quarter. Christina Parson-Nevelis got all the details. Christina.
Yeah, Peloton shares down 25%, and this after quarterly results just failed to impress across the board. Peloton posted a net loss of $1.25 a share on total revenue of $805.2 million, I should say, when the street was expecting $810. Q1 gross profit dropped 20% year over year, although the company did manage to eke out some new connected fitness subscribers, which you're seeing on your graph right now on your screen at almost 2.5 million. It's only partially offset the continued impact of tread product recalls. As people head back to work and the gym, the allure of the bikes might be wearing off. The company says that the bikes, which are $400 cheaper than they were just a few months ago, are appealing to younger and less affluent consumers, their fastest growing customer segment. In other words, they're sacrificing margins to increase market share. Quote, "This informs our decision to prioritize accessibility and household acquisition over near-term profitability." Much like last quarter, Peloton points out the environment is challenging with supply chain constraints, commodity cost pressures. That's why guidance came in light. The company expects sales of $4.4 billion to $4.8 billion for fiscal 2020. And when only 3 months ago, they were predicting revenue well over $5 billion. So I guess we can expect some convincing on the earnings conference call that has literally just begun right now. Shares down 25%. Melissa?
Christina, thank you. Christina Parson-Nevelis. Guy, is this fair? Down 25%? I mean, it makes sense to try and go for more customers by cutting prices, or is this, razors and razor blades? They've done this for a long time.
Yeah, actually, it should be worse. But before we get into it, I mean, how can we even start this show without doing the obvious? What is today? What's today's date, Melissa Lee?
November 4th.
What does that mean to you? What does that mean to you?
It's Thursday.
It's your birthday,
Anyway.
and on behalf of the entire Fast Money team, happiest of birthdays. Anyway, look, you know, it's interesting. Back in May, Pete was on the show that night, and we talked about Peloton, and they got whacked on the back of the treadmills. Dan was on that night as well. And we talked about all the volume the stock traded. It held $80. It looked like it was a good entry point. It turned out to be correct. But, you know, you go the second time down, it typically never holds, and here we are. That guide was awful in a word. And it should have been, the bells should have been going off for me a week or so ago when I was watching the Ranger game, and a Peloton ad came out, and they said how they were slashing prices by about $400. So none of this is good. And there probably is further room on the downside. I'll say this. Typically, you trade 7 million shares a day. You're looking for a 70 million share day for capitulation. Maybe you get that tomorrow, but I don't think so.
What would you need to hear, Tim Seymour, on that conference call to think that maybe this big dip could be a buy?
Well, that they have more visibility, although, you know, granted, that's difficult in this environment for a number of macro reasons. But again, the connected fitness subs guidance down 6%. I need to understand a little bit more what's going on. And I understand that they're going possibly for a slightly different demographic. But is that, you know, are they playing defense or offense here? The fact that I want to hear them explain more how they're recalibrating is the term. And I put quotes around that. Because that's what I heard, and that's not a term I hear in terms of recalibrating the fiscal outlook that I hear all the time on an earnings call. So yeah, I want to hear more about that. I mean, this is a stock that not terribly cheap even after this pullback. If you think about it, you know, on an EV to sales basis, it's still probably 4 to 5 times. And a company that I think we all know where they sat a year ago in the sweet spot of where we were with COVID and stay at home. But that's not what's punishing this company right now, not the way it is now. We knew that. We knew that the trends were going to, the comps were tough. We knew where they were going to be. This is different than the street was expecting.
Less affluent, lower income customers. That's why they're slashing prices, Pete. I think this could be the start of a new fast money game, offense or defense. How are they approaching this? Where are they?
This is 100% defense. And I was going to say that, Tim. I mean, this is absolutely defense. And it's incredible because this is a company that's absolutely struggling right now, right, Mel? I mean, when we look at what they gave us in terms of the guidance, that was terrible. When they looked at the full year guidance, it's nearly $1 billion light. So I think that the fact that, you know, a lot of people didn't understand this company very well, and we've all seen it in the past. Any of us who are over the age of 50 know when you see these kind of items, eventually they become very expensive, hangers that hold on to your clothes as you're trying to dry them. I mean, this is the real problem. These guys now had to cut it by $400. They still don't have the kind of sales that they were looking for. The subscription model is what they're aiming for because that's where all the margin is. But if you're not selling bikes, you're losing on the subscription model as well. So I view this as something that was bound to happen. People like to be social. People want to go into the clubs. And when I look at some of these numbers, it's pretty extraordinary, some of the slashing that they're doing. They are bleeding money. Last quarter, about $400 million. I didn't even see what the numbers were this quarter, but I can only imagine they're bleeding just as much this quarter as well.
They had some amazing stats before. I think it was around the time of the pandemic. It could be, maybe a year ago or so, in terms of the number of workouts that each member did per week, or I forgot what the measurement was. It just showed basically a very highly engaged base. And I wonder how that is turning out now that there are more options, as Pete had mentioned, fitness clubs, for instance, going to the gym instead of staying in your house. Steve Grasso, what do you want to hear from this call?
Yeah, I don't think you could hear anything, quite frankly, that would make me think that they're coming from a position of strength. When you lower prices, like Pete said, that's a sign of weakness. To your point, less user engagement, total sign of weakness. The biggest sign that I see is that Planet Fitness was up 11% today. So people, that their biggest competition is not just the Apple app or fitness apps or other fitness subscriptions. It's the real world opening up. So if you can get out there, it's a social event to go to a gym. No longer are they going to be able to charge what they can charge for a treadmill, for a treadmill or a bicycle, when you can join a gym for multiple years and still it be cheaper. This, I think, is a shot across their bow, and I don't think that they are going to be able to recover from this, quite frankly. So I think this is the beginning of the end, and the end is coming for Peloton. It's going to be very tough for them to pivot off of this.
The beginning of the end.
Wow.
Wow. That's quite a proclamation.
I don't think they're going to be able to survive. I don't think they're going to be able to survive. They would have to pivot very strongly with some other product that engages usage the way this did during a pandemic. So unless they can do that, and I don't see them doing that effectively, I think that the writing is on the wall. The economy is opening up. Gyms are opening up. People want to be social again. They don't want to be stuck in a basement with clothes piled on a treadmill, as Pete said.